Crypto is a market where the winner takes it all, or at least takes most. And sometimes those winners change. Polygon Matic, or the POL token, was not one of those winners recently. The question is, does it make sense to buy low to potentially afterwards sell high? Let's have a look at some data most people are not considering. Let's have a look at the on-chain analytics. Let's have a look at the tokenomics. Let's try to figure out where Polygon Matic is going from here. Now here's the chart everybody is looking at. It's POL, or the Matic, so those tokens are directly linked to one another on a very long-term chart, just a US dollar chart. And initially there was a massive rally, 600% in magnitude. But since the all-time high in 2021, we are down by 91%. Now there are two problems with this chart. The first one is that this is a linear scale, so you can't really see the percentage changes, especially for the low prices. The second issue is that we don't have a relative benchmark. We're just looking at the US dollar chart, and the problem is that most crypto assets tend to move in tandem with one another. In other words, when Bitcoin is down, most altcoins are down as well. When Bitcoin is up, the altcoins go up as well. So in the end, we want to know how much do we actually outperform just buying and holding Bitcoin or buying and holding Ethereum, right? When we take on more risk by buying a small altcoin, we need to also get long-term more return. Otherwise, why take on that additional risk? And so let's fix that. This is now Polygon Matic relative to Bitcoin over time. The issue is this is still a linear scale. So let's change this to logarithmic. Now, isn't that a much more useful chart? Now we see how Matic is performing relative to Bitcoin over time in percentages. So this drop over here is roughly 70%, and this drop over here is also 70%. So the vertical distance equates the same kind of percentage change. That's specific to logarithmic scales. That's very different for linear scales. And so here's the obvious. Since February of 2023, Polygon Matic is underperforming Bitcoin very consistently. We are looking at 93.5% underperformance. Had you invested into Bitcoin instead of Matic in the last 2 years, a bit more than that, you would have roughly 30 times the capital. And so that then begs the question, can this potentially turn around? And what's the cause for this underperformance? I've published several videos on Polygon Matic before on this channel, and here is one of the main reasons for the bad performance. The tokenomics of Polygon Matic have changed. So there used to be just the Matic token, and everybody thought that all of the token supply was fixed after November of 2022. There would be no more additional tokens hitting the market, potentially depressing the price. But then came the move from the Matic token to the POL token. And suddenly, with that migration, we had token inflation yet again. The new inflation wasn't massive, but still the trust got broken. It might have been okay to have a change like this if the overall ecosystem is growing very rapidly, if a lot of money is getting into the space, if a lot of new traders adopt Polygon Matic. If all of that is true and we see massive growth, then adding new token supply might not have been the worst. The problem is that this is not what happened. Have a look at this. This is the total value locked, so the capital across all blockchains in decentralized finance according to DeFi Llama. We had our nice DeFi summer in 2021 and subsequently our Terra Luna collapse and FTX collapse in 2022. Now we are starting to recover. We are not yet at all-time highs, but at least there's quite a clear recovery, roughly 4x from the bottom. Now that's for all of DeFi, for all blockchains. How does this chart look like for Polygon Matic? The answer is here. We also had our nice DeFi summer. Polygon Matic at one point had 10 billion of total value locked. Then came the crash, as everywhere in crypto, but here's the big difference. Polygon Matic never recovered. It still got only 1/10 of its total value locked from the peak. And again, all of DeFi has almost entirely recovered. And it's not just the capital on Polygon Matic that's got a problem. It's also the usage of the chain, as in the trading activity. Polygon Matic is a scaling solution on Ethereum, right? It's a layer 2. And Ethereum itself had a trading volume across all decentralized exchanges of $4.1 billion in the last 24 hours. Compare this to Polygon Matic, which has way lower transaction fees, which should incentivize transactions, especially for market makers, especially for arbitrage bots. Still, 124 million compared to 4.1 billion on Ethereum. Now have a look at this. This is the Binance Smart Chain. It almost has 7 billion worth of trading volume in the last 24 hours. In the early days, there was a strong competition between the Binance Smart Chain and Polygon Matic. But it seems like that competition has a clear winner. And obviously, it's not Polygon Matic. There was also a secondary chain launched by Polygon Matic, which was ZK-EVM. So that's zero knowledge proof. That's pretty much a dead chain. It had less than $100,000 worth of trading volume in the last 24 hours. So nobody is using this. The most liquid of all the trending tokens on the chain had only 44 transactions in the last 24 hours. And that's wrapped Ethereum. It's probably all just arbitrage bots. Only 16 wallets interacted with the most liquid token on Polygon ZK-EVM. The deeper I look into the project, the more I'm losing hope. When I just look at the Polygon Explorer, the official page that shows all the information around Polygon Matic, there are some links that are completely abandoned. This is something that should not happen. So this is Polygon Scan, and when we go to resources, top statistics, we get an unavailable page. There are no top statistics. Luckily, there are some charts and stats. Here's the number of daily transactions on the chain, which is going sideways in the last 3 years. Here's the number of active chain addresses, which interestingly enough did rally a bit at the beginning of the year, but is now coming back down. I do not know what fueled this rally. If you do, feel free to share this down below in the comments. Maybe we've got some interesting statistics that we can look into for the following video, for the upcoming video. Here's the number of active ERC20 addresses. There might be some growth here, but there's also a lot of volatility. It's unclear whether or not the chain is growing. We actually have some independent data. For example, here, in the early days, Polygon Matic was known for its NFT market. So OpenSea launched at the very beginning together with Polygon Matic, and a lot of trades didn't just happen on Ethereum because Ethereum was very expensive in transaction fees. Now that went down to a degree. Polygon was the cheaper alternative, and there were NFTs on Polygon. Now those NFTs might still exist, but they definitely don't get actively traded anymore. Yesterday, we only had 49 wallets that traded NFTs on Polygon. For the entire week, it's 256 wallets. It's pretty much non-existent. Have a look at the number of users that bridged funds to Polygon, so that potentially wanted to use Polygon to trade within the ecosystem. That went down as well. And unfortunately, that trend is very consistent. The problem is that this is not macro driven. So just because Bitcoin or crypto in general is going down or slowing down, that's why Polygon is slowing down as well. No, Polygon is losing market share. Here's the number of transactions across various layer 2s on top of Ethereum. So those are scaling blockchains that make the use of EVM cheaper. And the base chain has gotten more and more market share. Polygon, on the other hand, is losing consistently. This is a long-term chart. It starts in December of 2022. So for any kind of active trading, it probably makes rather sense to do that trading on base. This is where all the momentum is, and to leave Polygon. Here's a more long-term chart of the EVM wallets on Polygon. Again, a pretty clear decline. So in light green, we've got the number of senders. In dark green, the number of receivers. Here's the number of smart contracts getting created on Polygon. So the developer activity is declining as well. And here's the wallet retention rate. So if you start using Polygon, how likely is it that you will still continue to use it after 12 months? The answer is 3.64%. More than 96% leave the chain after a year when trying it initially. Now, is there at least one thing that could be positive, that could support the Polygon price long term, and that could make it outperform Bitcoin, right? Because in the end, it's all not black and white. There can always be reasons for even the weirdest and worst of the coins to suddenly rally. Now, those sudden rallies usually happen because of short squeezes. So let's say many people bet on falling prices, and sometimes market makers push up the price in order to force liquidate the short sellers. Now, Polygon Matic seems like a pretty good target for short selling. Again, because of this chart over here. But I don't think we will see a short squeeze that quickly, because the market cap of Polygon is still very, very large. And the larger the market cap of a cryptocurrency, the harder it is to manipulate it. The Matic token still has a market cap of 2.4 billion. And I'd not be surprised to see this under 1 billion 1 year from now. The price is already getting supported by the futures market. So there is quite high open interest. The more open interest there is, so the more bets there are on the price, the higher the price tends to be. The less bets there are on the price, the lower the price tends to be. Currently, the open interest is already high. If that deflates, the price will go down further. Most liquidations happen on the long side, so most people are betting on rising prices. And that then rather incentivizes the market makers to rather dump the price. Again, to liquidate more longs, as happened over here in February of this year. So here's the funding rate. It's green most of the time. Most people bet on rising prices, which is probably not the best idea. Really, I do not think that it makes sense to buy Matic over Bitcoin. This chart speaks volumes. It might make sense to short it, but ideally, we want to get a nice short entry, right? We want to potentially enter a short after a rally. Those kinds of increases can be 30%. In this case here, even 82%. So if we see another potentially news-driven temporary rally, I think betting on falling prices might make sense. I'm not saying that we are going short-term up or down. I'm just waiting to bet on the macro, which is price underperforming Bitcoin, but I'm waiting for the ideal entry opportunity. And again, I will not bet on Matic in US dollars going down. I will bet on Matic going down versus Bitcoin, a relative valuation bet, something that most people don't do. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. And what we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar. It's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.